Mswati inkosi ithula akayithathe akahambe nayo akayithathe yotenza bakhe wone akayithathe
It's Monday, 2 p.m. and you're watching the live broadcast of Market View right here on Eswatini TV. I am Natalie Sitole. Welcome to the program. This past weekend, the kingdom entered a new era in its hospitality and business tourism ambitions with the official opening of the Eswatini Palazzo International Convention Center and Hotel Complex. As inaugurated by His Majesty King Mswati III, the multi-billion Malangeni development has now opened doors, or its doors rather, to the nation and the world. This is hailed as one of the most significant infrastructure milestones set to position the kingdom as a serious contender in the lucrative global MICE industry, short for meetings, incentives, conferences and exhibitions. The architectural spectacle, stunning. But let's shift to economics. Can this landmark development become the catalyst for a new wave of investment, job creation, foreign exchange earnings and overall economic growth? We'll speak to economist Sanele Sibia, but first, our business stories. In our business stories this afternoon, the Commissioner for Agriculture, Rural Development, Blue Economy and Sustainable Environment at the African Union, Moses Vilagate, says that in addition to energy, digital and physical infrastructure, what is still being worked on is the implementation of standards under the African Continental Free Trade Area. The African Continental Free Trade Area is a continent-wide agreement aimed at creating a single African market for goods and services by reducing trade barriers among member states.
In terms of readiness for African countries to meet AfCFTA obligations, a number of countries are ready, but we still need a number of things that needs to be done. The standards, for example, right now, for example, we are trying to get infrastructure through AFDB. They're already supporting us on the SPS because those standards are very critical. We want to be sure that it's really of the requisite standards so that they can monitor it. Fortunately, the regulations towards the standards, it's already being worked on. I'm sure that there was also a meeting even here in Eswatini. So there are meetings right throughout Africa to make sure that we can maintain the standards. The second one is obviously the quality, standards and quality of the products. Because if we say this is the product, it must be the product.
The Eswatini Environment Authority has engaged the University of Eswatini to develop a framework that will ensure producers and importers take responsibility for the safe disposal of their end products in order to protect and preserve the environment. This was revealed by Chief Executive Officer Gcina Dladla, who was responding to questions on what measures are being implemented to prevent the illegal dumping of certain products in the country.
The issue of products which come into the country, some with long-term environment impacts, has been one of the issues we've realized. It's one of those that requires policy intervention. So what we have currently done, we have instructed the University of Eswatini to come up with a framework. This framework is called Extended Producer Responsibility Framework. It's a framework which says, as a producer, as an importer, whatsoever product you bring into the country, what responsibility do you carry to make sure that its end of use is actually not just dumped or shifted to government, But you as an importer, you as a producer, you carry a level of responsibility. Many products that come into the country, we don't have a mechanism to deal with the end of life intervention with those products. You can talk about the only product, for instance, that has that end of life mechanism for a take back mechanism. It's car batteries. With car batteries, once your car battery has come to its end of life, you can take it back to the producer. So we need a mechanism that is going to talk to all products, whether it's car tires, whether it's packaging material, whether it's PET bottles, all those products that have a problematic end of life issues. So this framework is going to talk to those issues, but they are still busy with that process. What needs to happen is that we need to engage stakeholders. We need to talk to industry. We need to talk to other regulators. We have to talk to government so that we agree on a policy position to deal with the issues of dumping of most of these goods.
And you're up to date with some of the latest in business. After the break, we speak to in-house economist and Sibiya. Stay with us.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back and moving on with the program. His Majesty King Mswati III officially opened the Eswatini Palazzo Hotel and Convention Center over the weekend, marking a significant milestone in the country's hospitality and tourism sector. The newly inaugurated facility is expected to boost business tourism, create employment opportunities, and position the Eswatini Valley as a key destination for local and international events. As the nation celebrates this development, we continue to track its economic impact and what it means for investment and growth going forward, which is why we are now joined by economist Sibiya, who will help us break down the economic significance of this major opening and what it could really mean for the country's future outlook. Mr. Sibiya, good afternoon. Thank you very much for your time. So this is one initiative or development that has been hailed or described as transformative for the tourism and business sector. When you look at it from a macroeconomic perspective, what kind of GDP multiply effect can it have or realistically generate for the kingdom?
Thank you, Notile. A good afternoon to you and also a good afternoon to the viewers. So when you look at this, Notile, to me as an economist, what it states is a statement that the kingdom is making in terms of entering into that space of meetings, incentives, conferences, and exhibitions. So now that's a space that comes with a lot of delegates. And those delegates are going to need accommodation. And once they get that accommodation, they're also going to need to spend in the local economy. They're also going to need to see the local economy. So we're going to see tourism coming in from a lot of spaces. So we're going to have the professional tourism in the delegates, and then we're also going to see the spin-off effects as these delegates go on to meet, other people and to see the kingdom, and then also the money that's going to be spent in the economy. And then also when you look at what it takes to be in that meetings, incentives, conferences and exhibition space, what is required there, and not you find that you will need interpreters, because the venue is big enough to hold, very big meetings, and that means not everyone who comes into those meetings is going to be homogeneous in terms of language. So you expect that the local businesses should take up advantage of the interpretation space, audiovisual space, and other digital, security measures there. And then also you'd look into what's going to be happening in terms of the courier business. You're also going to look at what is going to be happening in terms of the transport and logistics to ensure that these delegates are able to move around. And then lastly, we expect to see a transfer of skills from, Dubai into Eswatini, who are going to be working within that space. So that's how we see GDP growing and trickling through as we see new businesses and the expansion into a business territory that we're not used to as a country.
For a second, Mr. Spear, let's rather address the critics who feel that because this multi-billion Malangeni project has been long time coming and now we are saying its official opening, what do you think, or what level of economic return really justifies an investment of this magnitude?
So in terms of the level of economic return when it comes to investment of this magnitude, Notsile, is you have to look at it in twofold. The number one, you would want to have a good return in terms of the benefits to the project over a planning horizon should exceed the cost. So what you're looking for is we need to ramp up the bookings and make sure that we get the business to come in there so that we are able to recoup the 8 billion over the next 10 years. And then also what we look into when we're calculating the cost benefits and comparing those ratios for public projects is you want to see those benefits in terms of taxes, the people you will employ, the taxes that will come from that. So those are the dynamics that you have to look into as well, the taxation and the employment that comes from those businesses there. And then also look at the spin-off businesses, how much they're contributing, because when you invest as a government, you are not necessarily looking at the monetary return, the cost, the benefits exceeding the costs, but you also do look at what we call the social utility function, where we're saying, look at how much you are impacting society, not just the bottom line.
Let's talk, while we speak on benefits, government has done a part, investment, but let's talk about the local supply chain integration. So often in establishments of the size, there would be importation of a whole lot of specialist services. Let's bring it locally. What must Eswatini do to maximize local procurement so that maybe the multiplier effect really just remains domestic?
So to increase and improve the potency of the multiplier effect within the local economy, what we have to do, Notsile, is to make sure that we grow our local suppliers to be able to supply over 50% of whatever service and whatever it is that's going to be imported into that space. So largely for me, I've always said when it comes to the potency of government expenditure in the kingdom, we need to ensure that our procurement policies clearly state the procurement procedure there. So we need to ensure that we procure locally and domestically so that the benefits stay here at home. And where the benefits, where the skill is not there domestically, we need to ensure that we craft our policies in a way that it's going to ensure that there is, a symbiotic relationship between the company, the party that's going to get that contract, and also Eswatini, where you make the businesses work together so that to transfer those skills and that know-how, so that eventually, even if that company does leave, Eswatini have that capacity. So it is all about deliberate policy and deliberate action to ensure that we keep a lot of the commodity sourcing internally, and we also keep and ensure that there is a skills transfer.
In my reading up, Mrs. Beer, on the local travel and tourism industry contribution to the economy, contribution to employment, the figure is estimated at least 5.7% of GDP-related employment. How much could a flagship project like this expand that kind of footprint?
Most definitely, not it will, because we're talking of delegates here. So definitely these are people whom we are going to have to transport in one of those luxury cars, the Viennas, those luxury high level vehicles. So you are going to see that space into the luxury travel space as and when the vision over the space picks up. And then also you're going to also see transport operators moving into the space where you would need decent transport to ensure that people are moving from the airport to the venue. You're not going to send any other quantum that's on the road. So there is going to be an entirely new market. Like I said, we are coming into a new space as a country. We've never had a venue this big that can host, delegates that many. So it's an entire industry, and it is going to improve, onto the transport sector and into the tourism sector overall, because most cases when people travel, they don't only just travel for the business, they're also going to see the kingdom as well. So it's a project that has quite a lot of potential to improve on what we call business tourism, the transport sector, and all those spin-off activities that will come off of that, off of those conferences and all of these other activities that are going to be associated with the venue.
So one of the ancillary industries that are going to benefit from this project is the transport. And thank you for roping that one in, Mr. Spear, because my next question was on how a world-class facility needs to be matched with at least improved accessibility. How important is air connectivity and transport, whether road or vehicle? How important is that to the success of this development?
One of the critical factors, that delegates look into and that conference organizers look into is accessibility, both in terms of cost and also in terms of time. So you do need to be an accessible destination, and you do need to have competitive rates so that it is relatively easy for people to move into Eswatini. So we do need to ensure, we do need to remain competitive in the airspace, remain competitive on road transport if this project is to be a success and if we are going to have the traffic that we are looking for. But so far we do have the facilities. We have KM3 International Airport, which is now at a world-class standard. We have the good roads that are connecting the KM3 International Airport to the Zuluni Valley, and also through all our borders we have very good roads that are connecting to the venue. So what we need at this point in time is to make sure and nurture this new transport industry that is going to develop as an offshoot of this of this milestone event in the kingdom's history, where you need that luxury space to come up and ensure that we're able to transport delegates in style, so that they will keep on coming to have their meetings in Eswatini. And we're also going to need to have, cordial drivers and cordial transport operators who are going to be able to to converse and transport dignitaries in an appropriate manner, compared to just transporting people as if you're taking them from their place of residence to their place of work. So there is going to be a metamorphosis within the transportation space, Notsile, and we are well connected, and we have the right synergies and interlinkages to ensure that we can push the agenda, and we can get the hotel to an extent that it becomes a success.
Thank you very much, Mrs. Bia, for that one. That was in-house economist Anele Sibia just talking to us about the economic opportunities that await as the Eswatini Palazzo officially opens its doors to the rest of the world. We're back again with Sibia right after this for the market analysis.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back, and moving on to market analysis. We're still with in-house economist analyst Bia. Mrs. Bia, thank you for staying with us. So when we talk markets, a couple of events remain critical. That is the US-Iran peace talks still stalling, the Strait of Hormuz also still rather disrupted, and it's a critical week when we're looking at central banks. How are any of these shaping market direction right now?
Thank you, Notsile. Good afternoon once again to the viewer. So when we look at markets, Notsile, we're seeing a bit of a paradox, and I think markets are now used to the uncertainty, and they are now working with the uncertainty, because when you look at the numbers, when you look at the numbers are showing an edge in the right direction, while in the upward direction, while the tensions are continuing. But what is good overall, Notsile, is overall bombardment between Iran and the US has somehow cooled down, and all that we are waiting for now is when are they calling the meeting for that ceasefire. So markets are somehow tethering between that, and it seems one other thing that we are noting is markets seem not to be so much phased about the price of Brent crude and the price of oil overall. So to me, it basically means markets have actually adopted, and they've adapted to these uncertainties, not so.
When you go from equities to currencies, what are we actually looking at right now?
So currencies, what we're seeing is, in today's trade, the Lilangeni has somewhat improved in terms of the exchange rate to all major currencies. It has strengthened a bit, and also we're seeing gold coming down a bit, which in itself shows a market that is moving away from being a relatively hedging, economy, into a hedging market, into a relatively trading on equity, into relatively trading on equities and also and the currencies as well as also doing well. So the risk is somewhat there, but markets have done so before. I mean, if you recall, during the start of the Russia-Ukraine conflict, markets first panicked and then they just adopted and assimilated the risk. Same thing with Trump and his Independence Day or Liberation Day last year, if you recall, when we started seeing a lot of tariffs flying around and a lot of uncertainty flying around in the market. Again, markets were just trading as though everything was normal under those circumstances. So markets are quite able to adjust, have been able to adjust to the risks, and also consider it's been over a month and since we've had this conflict. So markets have adjusted. So starting with the US, Notile, we can see what we are talking about. The AI continues to drive growth with the Nasdaq Composite Index up 398 points and the Standard & Poor's Index for the top 500 companies also up 56 points. So now this is despite fears around AI spending and also despite fears around a higher interest rate environment. So markets are just right now focusing on available data, earnings data, and also focusing on the underlying fundamentals. Global economies, the UK economy and the US economy continue to posit a relative resilience even amongst these tensions that we are seeing in the global landscape. And then when you come into the European markets there in London, markets in London particularly are showing signs of a bit of fear around the issue of the Strait of Hormuz. If you recall, we've seen over the weekend, some the Iranian Revolutionary Guard, actually boarding a couple of tankers that were transiting the Strait of Hormuz. And now that is what has pushed the price of Brent crude oil above the $100 mark per barrel. And now the markets in the UK particularly are showing that. And remember, the UK is what we call an old economy. So most of these very traditional companies are listed within the London Stock Exchange, and they are the ones who tend to feel the pinch of a bottleneck within the energy stocks. So even though right now London is climbing back up 19.26 points, but overall we are ways away, we are ways away from the 10,700, 10,800 mark in terms of oil share volumes that we've seen, before the start of the war. Germany has gained some 181 points, but it's basically a flat line from where we were in terms of, the overall share volumes within the DAX there. So that means markets are just adjusting and factoring in this risk. So you can see the tension within markets, particularly coming through from, the DAX as well. The French markets, again, below the 8,300 mark that we saw last week, but we're seeing a relative climb of 44.45. Another flat line again. So if you look at the European markets, they're basically flatlining, and UK is basically dipping when you follow the trend and normalize it. Then coming into Japan, that's where we're seeing a market that is completely oblivious and not taking into consideration the war, or a market that has fully, absorbed the likely impacts of the war, and a market that is trading on the fact that there is a bit of a trickling out of oil from the Strait through the Strait of Hormuz, and also a market that is benefiting off of this tech rally that we're seeing in the US. So Japan is on a record high there, joining the Dow Jones and joining the Nasdaq on those record highs, sitting at 60,537.36 in terms of oil share volumes, gaining 821 points. The Hang Seng has lost just a bit, but still above, those pre-war levels. We're seeing it standing at, 25,125.65 in terms of oil share volumes. The Shanghai Composite Index is basically flatlining again, gaining some 6 6.44 points in today's trade off of this optimism. So that means now even Asia is viewing the war situation as a one that is subsiding. Coming into South Africa, the Johannesburg Stock Exchange has dipped to 116 in terms of overall share volumes. So now that reflects the fragility within the gold makers, within South Africa, and also South African markets are very sensitive to the price of Brent crude oil. We've seen it go above the 100 mark. Remember, we do not have the capacity to stockpile like those Asian countries and like those, like Europe as well. And then in terms of the gold in itself, gold has somehow come down to the 4,700 mark, and Brent crude oil is on that $100 mark per barrel. And then coming into the currencies, Notsile, that rebound and that settling of hostilities in the Strait of Hormuz, relative settling of hostilities. We're seeing a relatively strong Alilangeni trading at 16.48 against the dollar and trading at 19.35 against the euro. And one Lilangeni is worth 9.66 Japanese yen. Thank you, Notil.
Thank you very much, Mr. Spear. That was in-house economist and Spear sharing insights on the day's trade. This has been Market View, the Monday edition right here on Eswatini TV. From myself and the crew, thank you for staying with us. Until next time, bye-bye.